What's up everybody, and welcome to another video. And in this video, what we're going to be talking about is my personal opinion, top 5 monthly dividend ETFs. These have some high yields. Some of them have yields upwards of 10%. These are some big yields. We're also going to be taking a small look into the portfolio that I just got done building. So before I do go any further, all I ask that if you enjoy this video, just make sure to give this one a thumbs up and you subscribe. You turn on post notifications for videos coming out every other day. I'm providing as much value as I can, giving you guys all the access to everything. Follow me on Instagram and TikTok. Links are in the description below. But enough of wasting your time. Let's get into the video. So before I do talk about these ETFs, let's just talk about the dividend portfolio that I did build. So first off, it comes with 6 different slices. You've got tech and cloud computing. You've got just the income fund, which is just ETFs, real estate, banking and fintech, consumer and stores, and then restaurants and food. So what is tech and cloud computing composed of? It composes pretty much these funds hold about 3 to 5 stocks in each one. I don't want to go too deep into it yet. I don't want to waste your time. Let's just talk about what's going on with these stocks. So we're first off talking about QYLD, Global X Funds, Global X NASDAQ 100 Covered Call ETF. So I'm sure you've probably heard about this. This ETF is kind of getting more traction, more noise recently. But what we'll see is over the past year, it's up 5.69%. The first 3 ETFs we're going to be talking about, I actually do not own. We're going to talk about why I think they're good choices, but why I don't own them myself, and the last 2 I actually do own. So we'll talk about, the first thing I want to talk about, the reason I don't own QYLD is because whenever it comes to investing, don't get me wrong, I love dividends and all that good stuff, but I do believe in growth growth overrides strictly dividends in my personal opinion. And with QYLD, the growth is not that nice. You'll see right here, the yield is 10.42%, which is incredible. I love that yield. You know, it pretty much almost guarantees you, quote unquote, guarantees you a 10.42% return on your money every year, whether the market goes up, flat, down. Now, if it goes down, sure, your returns can be a little bit less. Over the past year, this technically year to date is up like 16, 17%. But year to date total, because the price has gone down 0.66%, your yield is not necessarily even 10%, it's about 9%, which is still very good, but I believe there's better opportunities for me to put my money in. Looking on these companies' dividends, current dividend yield 10.42% gives you a payout of $2.36 per share, and a consecutive dividend growth of 2 years. Now all these ETFs pay a monthly dividend. Their last ex-dividend date was this Monday, so we just barely missed it. But if you buy it next week or anytime soon, you'll be getting that November payment, which should be a solid one. If you want to go to their dividend history, just see how much they're paying on average. You can check this out on Seeking Alpha. That's what I'm using. But what you'll see is the dividend history. It's a little volatile, you know. It's a covered call ETF, so the payments aren't going to be 100% income streams as like you would if you were investing in a company that has solid revenue forecast. But whenever you have a covered call ETF, the premiums defer, which that's what this ETF does. They take stocks in the NASDAQ 100 and they sell call options on those stocks to collect the premiums. They collect some premium, they pay out the rest of the premium to the shareholders, you and me, and for example. So that's what this ETF is. They are, I'd give them a pretty good ranking, probably about like a 4 to 5, just because of the simple fact that their dividend yield is very high, but the growth is not there. So I give them like an 85 out of 100. Okay. Looking on the next company we'll do is PEY, Invesco Exchange Traded Fund Trust, Invesco High Yield Equity Dividend Achievers ETF. So this company, when it talks growth, I think the growth is there. You know, over the past year, we were up 37.21%, but over the past 5 years, we're only up 33%. You do the math, that gives you about a 7-ish% return. Not even 6.5% return year over year. Then you got the dividend yield plus that 3%, about 10% year over year, which is pretty good stuff, 9%. And I like those returns, you know, they're very solid. We'll see it's pretty flat though ever since the past few months, like past 6 months. We are only experiencing gains of 1.37% in dividends on a monthly basis of 3.78%. Looking on the company's or this ETF's dividends, annual payout of 79 cents per share, low payout ratio of 11.68%, consecutive dividend growth of 10 years, and a 5-year growth rate of 9%, which is very, very solid. We just missed this ex-dividend date as well. A payment of 7 cents per share seems small, but you paid monthly, so you paid 12 times a year, which is good stuff. Now, what does this ETF do differently than other ETFs? They track a yield-weighted index of U.S. companies that have increased their annual dividends for at least 10 consecutive years, which is pretty solid stuff. It's a pretty good ETF. But another reason why I don't own this one is the expense ratio is a little bit high, coming in at 0.53%. Not super high, but also the growth long term has not been as solid as I think it could be. 33% 5 year could be better. But let's talk about the next ETF. And this is the last ETF that we're going to be talking about that I currently do not own, and that is PCEF. I'm sure if you're very observant, you can tell why I don't own it already. And that's because over the past 10 years, it's only up 4.55% in share price appreciation alone. But over the past 5 years, we will see we are up 9.3%. And over the past year, we are up 19.20%. A lot of these stocks are making good returns because of all COVID, and these ETFs are starting to make rebounds. This ETF has a nice whopping yield of 6.67%. But another reason I don't own it is 2.34% expense ratio, which is very high. So you're getting a 6.67% yield, but you're paying 2.34% expenses, which is very, very high. Looking on the company's dividends, they pay these out monthly, like we talked about. Every single stock ETF on this list will. They had their ex-dividend date this Monday as well. 5-year growth rate on their dividends actually dropped by 1.5%, which I don't like to see, but it's an ETF, so it's a little bit understandable. So what does PCEF do? They track an index of 3 types of yield-focused closed-end funds: investment-grade fixed income, high-yield fixed income, and option writing. So they make all this money, they make all this income, they get a lot of profits, and then they pay it back to the shareholders, and that's what they do. That is what PCEF is. Now, let's talk about the 2 dividend dividend ETFs that I own. First off is JEPI, JEPI, JP Morgan Equity Premium Income ETF, with a whopping dividend yield of 7.31%. Over the past year, we're up 14.37%, and over the past 5 years, they haven't even been an ETF until May 21st of 2020. And I believe JP Morgan is one of the top investment banking firms there is, and with a semi-low expense ratio of 0.35% and this consecutive growth, I believe this has nice potential to put a spot in your portfolio. But remember, everything I say is not financial advice. It is my personal opinion. With a whopping dividend yield of 7.3%, monthly payments, dividend growth of 1 year, because that's their entire track record, and an annual payout of $4.51. They have monthly payouts of roughly 34 cents per share that you own, but it is a covered call ETF, so you're going to have to be a little bit careful. You're not going to be getting consecutive, consistent linear growth. You're going to be experiencing dividend payments that are pretty solid, but they're going to be a little bit volatile all over the place. Now, let's talk about what this ETF does. They're an actively managed fund that invests in large cap U.S. stocks and equity linked notes, and it seeks to provide similar returns to the S&P 500 index with lower volatility and monthly income. So what they do is they sell covered calls, they have these equity linked notes, they collect this income, and they pay it back out to the shareholders in a dividend yield of 7.35%, which is a very, very solid yield. In my opinion, assets under management is currently $4.10 billion. Now, let's talk about the last ETF on this list and the last one that I do own, and that is SPHD, Invesco S&P 500 High Dividend Low Volatility Portfolio ETF. We'll see right here is they currently have a dividend rate of $1.60 and a yield of 3.66%. Not the highest yield out there, but I do believe that this ETF is very stable and that almost makes me feel like I'm hedging against any badness in the market, like corrections, anything that could happen. Over the past year, they're up 29%, but over the past year, we can see COVID made it take a hit. I remember whenever I saw this, I started buying a ton of SPHD, around this little area right here, because I just take advantage of it, get my yield on cost, stuff like that. And I'm glad I bought the shares then. It only fell to $28 a share, and so I started buying and buying and buying. Over the past 10 years, up solid amounts, up about, I'd say, 90%. So 10-year growth, that's about 9%, just year over year, simple math, plus your yield of 3%. It used to be a lot higher, but then some things happen, things happen in the market, and now the yield is sitting at 3.66%. Looking at the dividend, $1.60 payout, every single year, 3.77% 5-year growth rate. We just missed this ex-dividend date as well, past Monday. What does SPHD do? They track dividend yield weighted index comprising of the least volatile, highest dividend yielding S&P 500 stocks. Some of their top holdings actually include Williams Companies, Kinder Morgan, PPL Corporation, Iron Mountain, Altair Group, Chevron, AT&T, Philip Morris. You get the gist. So I believe that those past two ETFs do believe I invest in them. I think you should too. That's my personal opinion. I'm not trying to give you guys financial advice, just for entertainment and educational purposes only. And then the past three that we talked about, the first three, they're okay. Nothing wrong with them. Like if you invest in them, that's completely incredible, like great for you. They provide good returns. They're just not for me, not for my portfolio. I'm more growth oriented with dividends on the side rather than strictly chasing dividend yields. But guys, that's what I have for you in this video. If you did enjoy it, make sure to give this one a thumbs up and to subscribe. Turn on post notifications for every other day videos. I would like to see what you guys doing, what you guys are thinking. Make sure to check out the links in the comments below for free stocks, and you can also get my ETF portfolio. Whenever this dividend portfolio is 100% finished, I will be posting that out 100% free. Thank you again, and I'll see you at the next video.